The supply of homes to purchase in the Portland metro real estate market is on the rise. Today, I'll take a look at the effects of rising inventory on sale prices and days on market. That, and I'll give you a quick update on the foreclosure scene. It's time to take a look at the numbers. Welcome and thanks a million for joining me this week. If this is your first time to the channel, I'm RRMilligan and I've got the very latest in stats and trends for the Portland metro real estate market. That's the full metro area, including Southwest Washington. I hope that you enjoy the report and find something both informative and helpful. The overall inventory of homes to purchase on our market is inching down, and again, that's typical for this time of year. We should probably hit bottom sometime this month, and the number of homes on the market will start to increase as we enter our spring buying season. The number of homes that hit the for sale market has been higher than last year for a couple of weeks now, and that's causing increases in our year-over-year comparison. That is, we're seeing an increase in the inventory relative to last year. So right now, buyers have about 29% more homes to choose from versus last year at this time. What that means is that if a buyer had 3 homes that fit their criteria last year, then in 2025, and this year, they might have 4 to choose from. The effects of this increased inventory relative to last year can be seen in the average number of days that a home spends on the market before receiving an acceptable offer. Currently, that number is 84. Last year at this time, it was only 59. How has this larger inventory influenced sale prices? Well, not as much as you would think. Sale prices continue to recede in our week-to-week stats. Again, that's also normal for this time of year. But compared to last year at this time, the average sale price was up 4.6%, which is a hair higher than the 4.2% increase that we saw in the month of January. So on to demand. After several months of outperforming last year's buyer activity, buyer demand has backed off to pretty much the same levels that we were seeing last year at this time, at least for the last couple of weeks. The number of purchase contracts agreed to by buyers and sellers was only marginally higher than last year at this time. If you recall, last week we saw a huge jump in the number of lockbox opens, which is our best measure of high intent buyers out looking at homes with their agents. That number last week was up by like 70% compared to the previous year. Well, those numbers pretty much equalized with our most recent set of lockbox open numbers. That is, the numbers this year pretty much matched what we saw last year at this time. So let's talk about foreclosures since we haven't done that in a little while. We did see a bump in the number of bank-owned properties on the market. The number jumped from 46 to 55 in 1 week. That's a relatively large jump for a small set of numbers. However, that's still a really low percentage compared to the more than 7,700 active and pending homes currently on the market. So let's put this number into context. Last year at this time, there were 59 bank-owned properties on the market. So not a huge difference compared to last year, but still something that I'm gonna keep an eye on. Now on to the ever important topic of mortgage rates. Mortgage rates have been pretty much stuck at a best case scenario of about 6.75% for the last 3 weeks, and that's not really changed much this week. That 6.75% is the best rate I could find advertised for the 30-year fixed. The yield on the 10-year Treasury, one of our best indicators of where mortgage rates are headed, did decline this week, but there was no real change in mortgage rates. It kind of looks like the markets are anticipating some sticky inflation in the near future and are hedging a bit. That and the January jobs report that just came out this week showed that unemployment fell from 4.1% to 4% in January, making it likely that the Fed will hold off on any rate reductions at its next meeting. Well, there you have it, the big trends that I'm seeing in the market right now. Thanks a million for watching the video to the very end, and I hope that you got something of value from the report. As I love to say, all real estate is local, so if you're curious about the activity in your neighborhood, reach out to me anytime. I'm happy to help with all of your real estate needs, and I will see you right here next week.